Well, good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder, and this is BRN AM for Friday, March 20th, 2020. And here are our top stories. A global recession may have already begun, and the Federal Reserve steps in to provide businesses credit. Well, joining me now is Devin Banerjee. He's a senior financial services editor for LinkedIn, and he's also the editor for the This Week in Finance newsletter, which you can get through LinkedIn. Devin, thanks so much for joining us on the program today.
Absolutely, Jeff. Good to be with you.
So, a lot going on. You and I are both working remotely. I'm in my home studio today, and you're in your home doing work. But lots going on in the economy, lots going on with the coronavirus. What's top of mind for you and the team at LinkedIn?
Yeah, absolutely, Jeff. It's kind of like drinking from a fire hose, all the updates constantly. I'm going to talk about a big one. Economists and market watchers have been talking about the prospects of a recession for years now, and suddenly we have tumbled into talk of a global recession. So just this week, economists at Goldman Sachs, Morgan Stanley, as well as 4 former chief economists of the IMF, the International Monetary Fund, came out, among other economists, to say that a global recession has in fact already started. So what is a global recession? Different definitions out there. The IMF defines it as annualized global growth falling below 2.5%. Some others describe it as major economies entering recessions as they define it concurrently. Of course, here in the US, we define recession generally as 2 consecutive quarters of negative growth or contraction, if you will. But many of these economists, including those 4 former IMF chief economists, say that regardless of the definition, the conditions are being met right now. So recessions are kind of interesting in that they're defined kind of ex post, meaning a recession begins, but then it's defined a quarter or 2 later as the growth numbers come in. But they're saying those conditions are met. A lot of them are saying that after some recent data coming out of China shows that the economic impact to China by the coronavirus has actually been much worse than anticipated. So that recent data is showing industrial output in China down 14% in January and February, retail sales down 21%, fixed asset investment down 25%, record unemployment in China in February, about 6.2%. So as that revelation came out, of course, China is the second largest global economy. A lot of economists revised their forecast. And of course, the world's largest economy, the US, continues to be impacted.
So, Devin, I would imagine that the reaction on the platform, which is what we want to talk about here, was all over the place. I mean, a lot of people working from home, except essential personnel or people that have to go to work. Here in New York City, in the New York area, can't even go to restaurants. Can't even go to shopping, do retail. But what's been the reaction on the platform as a result of all this?
Yeah, definitely. A couple of nuances. One I would mention is people are starting to get a bit nuanced in terms of where the impact is being felt most acutely. So we're starting to see in this workings research that we featured on the platform, we're starting to see areas of the Sun Belt states in the United States, as well as areas where the energy and oil economy is very pervasive, being hit the most. So of course, oil today, I think we're filming on a Wednesday, fell about 25%, now at an 18-year low. That is really hitting parts of Texas, for example. Brookings came out and said the number 1 city or region in the country that will be affected is Texas, Midland, Texas, Odessa, Texas, Laredo, Texas. Then people are pointing to where the leisure and hospitality sector is most pervasive. So Hawaii, actually, number 2 on Brookings' list. Atlantic City, number 3. Vegas, number 4. And then people coming out from different industries talking about where they're seeing the most impact. So leisure and hospitality, number 1. Employment services, transportation, mining, and travel arrangements rounding out the top 5. The other thing we're seeing on the platform is the talk of, unfortunately, layoffs and furloughs is really picking up. I mean, that is where the rubber meets the road. That is where the real economy begins being affected. So claims in Ohio, just on Monday and Tuesday this past week, unemployment claims jobless claims jumped to 49,000 from 2,000 the same period last week. Rhode Island, New York State, we saw people complaining about the New York State jobless insurance website crashing because of volume a couple days ago. So that talk of joblessness, unemployment, we're starting to see that pick up on the platform a lot more. And as I said, I think that gives a sense of how real all of this is becoming to everyday Americans.
Yeah, I mean, I think if people are sick, but also if you're quarantined and you cannot go out, or whatever, social distancing, I guess, is the more PC word. You can't frequent local establishments. I mean, this has a real material impact, and it just has a cascading effect. And I know in the second segment, we're going to get to the Fed. And so I don't want to spoil that conversation, but just today, watching some of the conversations in the press conference, the stimulative efforts that are going on in the U.S. Congress. A bill already has passed the Congress. I think it was being taken up as we're filming by the U.S. Senate. So hopefully by the time this airs on Friday, this will may have already passed. But I think the government, the private sector, looking for ways to kind of keep things going and support Americans through obviously what will be a difficult time.
Absolutely. Yeah, we'll talk about this in the next segment. But now is when we're thinking about what assistance can be given directly to companies and industries hit the most, like airlines, travel, and small businesses. Our platform has really lit up with small business commentary from owners and operators. My colleague Jordan Dahl, I would encourage people to follow her updates. Just hundreds of small business owners and operators pouring out their stories about not being able to meet payroll, meet rent, seeking rent alleviation, talking to their lenders about alleviation and extensions on debt obligations. This has become very, very real very quickly.
Yeah, I want to leave this segment on a positive note. So let's try to take something positive out of this. And I'll start, Devin, and then I'll let you finish. I think that this is an opportunity for people to revisit how they conduct business. Technology. We're in two different locations. You're in San Francisco. I'm in New York. We're using technology to broadcast this. This is a way to continue to reach people, whether it's talking about the economy, whether it's talking about retirement, savings, healthcare, all these different issues. I would posit to you that people, the American people in particular, will find a way to use technology and to reach others and to reinvent themselves and their businesses. But I'll leave it on you. You have the last word here.
Similar point as yours, Jeff, and actually I'll leave the last word to my CEO, Jeff Weiner, who today told all of us in the company that the future of work, which we talk about as kind of this amorphous concept, the future of work is happening right now. We're discovering it right now, and we're being forced to discover it right now. And I think after all this is over, and the very unfortunate health effects and illnesses and all of that, and economic effects, people will have discovered at least a new future of work and can implement that going forward.
Yeah. Well, Devin, I want to hold you here. When we come back, we're going to talk to Devin about Fed actions, and we'll also probably get into some of the stimulative efforts going on in the U.S. House of Representatives and the U.S. Senate. So stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
The windows on our homes, they protect us and the ones we love, but they do much more. At Renewal by Andersen, making your home more comfortable is at the center of every window we make. It's why we custom build our windows in America and install them in as little as 1 day. It's why we build our frames with exclusive Fibrex composite material that's 2 times stronger than vinyl. It's why our glass helps keep your home warmer in winter, cooler in summer, and quieter all year long. It's why we stand behind every window with a 20-year limited warranty. Why not help lower your energy costs while giving your home and family the best? Call 1-800-835-6525 to schedule a free in-home consultation. Buy one, get one at 40% off with this special offer. Plus, get special financing with no money down, no monthly payments, and no interest for 1 full year. Renewal by Andersen, the better way to a better window. Call 1-800-835-6525 now.
Welcome back. We're talking to Devin Banerjee, Senior Financial Services Editor for LinkedIn, and he's also the editor on the This Week in Finance newsletter, something you can access on the LinkedIn platform. Devin, thanks so much for sticking around this morning.
Absolutely, Jeff.
So we talked about the recession. We could be in the middle of a recession. We tried to end things on a very positive note. Let's flash forward now to this week. The Federal Reserve acting on Sunday to, prime the pump or pump the prime or lower the interest rates to incentivize more lending. But what can you tell us here as a result of this action by the Fed?
Absolutely. A very busy time at the Federal Reserve, acting much more quickly, fortunately, than even during the financial crisis, to be honest. So on Sunday, some emergency measures lowering the Fed funds rate to a range of 0 to 0.25%, effectively zero interest rates, lowering the bank reserve requirement ratios to 0, allowing banks to borrow from the Fed discount window for up to 90 days, and launching quantitative easing with the $700 billion asset purchase plan that actually began this past Monday. So that's kind of at the financial system level. What we saw just a couple days ago, about midweek, was something really interesting, which has not happened since the crisis, which is what people call CPFF, Commercial Paper Funding Facility. Mm-hmm. This is the Fed stepping in as a backstop for the commercial paper market. It's a $1.1 trillion market for short-term funding for companies and businesses, effectively financing their day-to-day operations, including important things like payroll and other day-to-day expenses. So the Fed stepped in as a backstop for that market, which is really symbolic. It kind of it injects confidence for businesses and companies to enter that commercial paper market, and effectively it breaks what people call the fear loop. You know, you don't want liquidity and credit to seize up. You don't want people to stop accessing credit and servicing their debt obligations. And so, you know, the Fed here is really, as I said, injecting confidence to borrow, preventing liquidity from drying up, preventing credit from seizing up. The Fed also enrolled another action not seen since the financial crisis. This is the primary dealer credit facility, related to what I talked about before, allowing banks to borrow more easily from the Fed. These are 25 large financial institutions known as primary dealers that can borrow more easily from the Fed. And effectively what all of this does, as I alluded to, is unclogs the financial system, keeps credit flowing, and keeps it from seizing up.
Yeah, I mean, one of the concerns in the 2008 financial crisis was the breaking of the buck of a money market. And I think this is a lesson learned. So, you know, trying to be positive here. This is a lesson learned from the 2008 financial crisis. Keep things, those money market funds, which are in retirement plans, but also backstopping, to your earlier point, cash liquidity, money market on accounts to make sure that that does not drop below $1, which would be effectively breaking the buck. Devin, every day I listen to the president and the team's press conference. Yesterday, Treasury Secretary Mnuchin talked about some of the stimulative efforts. There's more coming out of the White House. We saw things pass in the U.S. Congress. A lot going on there to give the average American, a real American, the $1,000 of money they need in short-term, almost like a short-term lending, or giving people money so that they have the ability to buy groceries and do the basic things, take care of their families.
Yeah, surprising bipartisan support, but very fortunately, there is that support for a $250 billion plan to, as you said, send checks directly to Americans, potentially $1,000 checks into people's pockets. It's a stimulus measure, a confidence boosting measure, hopefully. It goes along this theme we're seeing during this crisis, or downturn at least, where the government is thinking a lot more about direct assistance to everyday people and everyday business owners, versus the last crisis where it really had to focus on the financial system and big financial institutions, which was, of course, very controversial at the time. I would just note as well, on the LinkedIn platform, a lot of conversation, which I alluded to in the previous segment, around small business owners and operators. We asked thousands of them, small business owners and operators, to talk about what they're doing with their company's finances. We also asked small business bankers and lenders to give some advice. I'm just going to point out some advice. This is from a LinkedIn member, Bob Marshall, who's a small business development leader at Wells Fargo. And he said 3 things small business owners and operators can do in the meantime as they're figuring out access to credit. But number 1 is what people call scenario planning. So sitting down and going through the difficult process of playing out on paper how the business can look in 30 days, 60 days, 90 days, 180 days, if trends continue as is, or maybe stress test it if trends worsen, and also on the front end of the spectrum if things get a little bit better. Number 2, consult some objective advisors, what Bob calls the kitchen cabinet, close advisors who can give an objective opinion on that scenario planning. And then number 3, talk to your lender, your banker. Be upfront with them, be open and honest with them, share your scenario planning with them. And remember, if you put yourself in their shoes, they want to retain you as a client and hopefully prioritize that long-term relationship. So it's okay to reach out to them and have that conversation.
Yeah, I'm also wondering, Devin, all good points, and I just want to transition, talk a little bit about real estate. I'm thinking about the real estate transactions. You mentioned people who are just in the middle. We haven't even entered really the buying season, which tends to typically is spring into summer, because that's when people typically want to move. At least I've learned that from Jacob Passy over at Market Watch, who instructs me every week on the podcast about this marketplace. But I got to think that could be an area of concern, which would almost be like a reverse of what happened in the financial crisis. That people can't get access to the capital they need to buy a home, to close on deals. We could see almost the reverse happen here.
Yeah, that's right. People have been a bit disappointed, I would say, generally, in the mortgage market, not seeing rates follow, Fed benchmark rates that much lower. But we've seen a lot of mortgage bankers on the platform talking about how they're flooded with volume and applications. So I think that market is really working things out right now. But also just behaviorally and psychologically, buyers and sellers are probably just put on hold. Anecdotally, my wife and I were talking earlier about just, thank goodness we're not trying to move right now or change our living situation. Here in San Francisco, we're in a shelter-in-place situation. New York could follow. Many experts are saying that the nation should follow, and that's the way this virus goes away. So I think that market, the real estate market, is just sorting things out day by day, as we all are.
Yeah, more to come. And unfortunately, this is a very fluid situation, but we certainly appreciate you stopping by the program, or at least me stopping by you, or you stopping, whatever. But always appreciate talking with you, Devin, and thanks for sharing insights into the platform. Devin Banerjee, Senior Financial Services Editor for LinkedIn. Thanks for joining us this morning.
Thanks, Jeff. Take care.
And that wraps up this episode of BRN AM. It wraps up our shows for the week, but we're not done because tomorrow we've got our BRN Weekly Show where we take a look back in the week that was in finance, retirement, markets, etc. So you're not going to want to miss this episode. And don't forget, for all the news in retirement, markets, technology, personal finance, and so much more, check out today's edition of The Morning Pulse. So until tomorrow, I'm Jeff Snyder. Keep on saving and don't forget, roll with the changes.
Attention! The Centers for Medicare and Medicaid Services has officially authorized new benefits that Medicare Advantage plans may include. To get the benefits you deserve, you can call the Medicare Coverage Helpline.
Hi, I'm Joe Namath. If you're on Medicare, this is important information. I called the Medicare Coverage Helpline and they instantly looked up my coverage. In this one simple call, they offered to enroll me in a plan that includes rides to medical appointments, private home aides, doctors and nurses' visits by telephone, and even home-delivered meals. The plan also includes dental, vision, hearing, and prescription drug coverage, all at no additional cost.
Don't delay. Call to see if the new benefits are available in your area.
Call the number on your screen now. It's free.
Call 1-800-757-1451. That's 1-800-757-1451.